You know that feeling when everyone's whispering the same warning and you start to wonder if they're seeing something that maybe you're not? Well, right now, the entire crypto space is bracing for September, a bearish September, red candles, the inevitable pullback that history supposedly guarantees us. And maybe, just maybe, they're preparing for the wrong storm. I'm Annie. Welcome to Trade Travel Chill. If you're new here, you should know that I'm still in this space because my daughter rolls her eyes every time I mention Bitcoin, which means I clearly need to stack enough for the both of us. So here's what I've been seeing with all week. Everyone's looking at September through the same lens, the monthly returns table, the historical patterns, the it always happens this way narrative. But what if this time the market is setting up to break the very pattern that everybody's betting on? You see, there's something buried in those bull market charts that nobody's really talking about right now. Something about August closing bearish this time when it should have closed bullish. Something about fake outs that aren't quite fake outs. And when you layer in what's happening with liquidity, those buy orders sitting just out of sight, well, the story the charts are telling isn't the one that everyone's reading. So while the world prepares for a red September, we're going to do what we always do over here on this channel. We're going to look where the others aren't looking, because sometimes the most dangerous assumption is the one that everyone agrees on. Smash that like button as we get right into what to expect for crypto this upcoming September. All right, let's start with what everyone's looking at. This table right here. This table is the Bitcoin monthly return. It's going back for years. And if you scan down through September, you will see here that it's mostly red. Even in our strongest bull market, September tends to be that month where Bitcoin takes a breather. This right here is why people always say September is always bearish for Bitcoin. And I get it. When you see a chart like this, it feels foolish to bet against it. The math seems clear and the patterns seem reliable. But let's focus on the Septembers of the bull market year. In the September of 2021, you can see even though it was a bull market, that September closed bearish. In 2017, also a bull market, September closed bearish. And in 2013, another bull market, September closed bearish. So this goes to show that even in bull markets, September seems to be a bearish month. Therefore, everybody expecting September to be bearish again, it makes logical sense. But here's what fascinates me about all of this. It's not just that September has been red historically, it's how that history has shaped the collective psyche of every trader, every analyst, and every crypto influencer out there right now. If you scroll through crypto Twitter today, you'll see thread after thread saying, remember, September is traditionally bearish, don't get caught off guard by September dips, time to take profits before the inevitable pullback, when everyone's already mentally prepared for big red candles. That's when the market loves to surprise people. Because here's the thing about markets, they don't exist to validate what everyone already believes. What are the most expensive words in trading? It always happens this way. Because the moment everyone's betting on always, the market has an incentive to show us, well, except this time. So don't get me wrong, I'm not saying fade every consensus trade, but when the setup is this obvious, when the narrative is this universal, when even the newest traders know to sell in September, that's when you need to ask yourself, well, what if we're all staring at the same map, but the territory has changed? Let me show you something really interesting about traditional August-September data. Going all the way back to 2017, this here was the August and the September before the final blow off top of that cycle. Now, when we look in on the price action for these two periods of time, you will see that August was mostly bullish and that led to September pulling back. Now, in the 2021 cycle, towards the end of that bull market, you'll see also the August prior to the all-time high was a bullish month, and that led to September pulling back. Even if we go all the way back to 2013, you can see here that August was a generally bullish month. September pulled back a little at the beginning and then it was sideways. Ended up having a bigger pullback literally in the first week of October. So what we can conclude from all of this is that the reason we had pullbacks in September was because August was bullish. Nothing goes up in a straight line forever. So if you're going to have an entire month that is generally bullish, then it makes sense that at some point in the following month, there will be a pullback. It's healthy to reset the market. All this does is show you that nothing goes up in a straight line forever. But also the inverse is true. Nothing goes down in a straight line forever either. And that leads me to now want to have a look at August price action for this year. Our monthly candle is going to close tomorrow, and I think at this point in time, it's a pretty safe bet to say that the August candle is going to close bearish. This breaks the pattern of the previous August timeframes that I've shown you so far in this video. Let's go back to our monthly returns and have a look at those bull markets again. So down here in 2013, the bearish September followed the bullish August. In 2017, the bearish September followed the bullish August. In 2021, the bearish September followed a bullish August. But now it's looking like August is going to close bearish. Could that mean a bullish September? There's one other thing that I want to show you in relation to this. Again, going back to the 2017 cycle, what you'll see is that this candle right here was the last candle of August, and September opened with a false move to the upside, which, by the way, happened to be a Friday. So if you understand the TBD system, then you will know that Fridays is where the weekend trap gets set. So it's very possible if you were to look at this day on smaller timeframes, you would identify definitely a Friday fake out to cause the trap into the weekend. But that's not necessarily what I'm talking about here. What I'm talking about here is that the first week of September generally is a false move, which is what we can see to the upside, and then the trend gets set. So for the first 7 days, we saw a move to the downside, followed by a lower high that set the trend for that September pullback. Now, when we go and have a look at the 2021 cycle, you'll see the same. In the first week here of September, after the bullish August, we had a false move to the upside within the first week, and then we saw the big move back down to the downside. That was our September correction of 2021. So what this shows us is that when there was a clear trend for August, the first week of September gave us a false move before deciding the real trend for the rest of September. So again, when we come back to the current price action, all we have today is an inverse trend. So we have the move to the downside for August instead of up. Could it be possible that the first week of September gives us one more false move to the downside before then reversing up and actually giving us a bullish September? Now, before we dive into the technical analysis, it's going to show you exactly how to position yourself for that potential September surprise. You're going to need somewhere to take your trades in the first place. You know, all this analysis that we're doing means nothing if you're getting eaten alive by trading fees on a subpar platform. And that's exactly why I've been working with Weeks, because when you're making the kind of strategic moves that we're about to discuss in this video, every cent matters. Now, Weeks is available globally. You can get started in literally under 2 minutes, and we've got a campaign running right now, especially for the Trade Travel Chill audience. So let me quickly show you how it works. Right now, you're able to get 100% position airdrop boost by joining Weeks. They have new user rewards for securing your account and different rewards for different deposit amounts that give you position vouchers that you can use on ETH trades. Now, in addition to that, they also have futures trading bonuses. If you achieve just a future trading volume of 10,000 USDT or higher, you can claim 5 USDT as a bonus, but this goes all the way up. For example, 1 million USDT trading volume gets you 100 USDT, 30 million gets you 1,500, and this goes all the way up to rewards of up to 7,035 USDT. Now, if you use the link in the description of this video, you immediately get VIP2 trading fees for life. Not for a month, not until you hit some impossible volume threshold. It's literally for life. And that's the equivalent to a 25% discount on trading fees, which when you're actively managing positions like we're about to talk about, that can really add up fast. Now, you can only get this if you join Weeks using the link in the description of this video. So to grab the trading fee discount plus to be eligible for these rewards, create your Weeks account using the link in the video or scan the QR code on your screen right now. But speaking of positioning, let's get into the technical analysis. It's going to show us exactly where this September setup might take us. First of all, starting on the daily time frame for Bitcoin, you will know if you've been watching this channel for a while that I have these major liquidation zones that have my interest right now. Now, the major zone is here at 106 to 107.5. We did spike just into it yesterday. However, I would really like to see that whole zone taken first. Now, that's where the major liquidity sits, but there is still a pretty large zone between 103.5 to again about 107.5. So really this whole area has my interest, but if I try to get it down to a closer level, then it's the 106 to 107.5 that has my highest level of interest. Now, if the week opens bearish, that to me is enough to give us maybe potentially that 1 week false move that opens September to the downside to wipe this out before we then eventually see a pivot, maybe the following week, or maybe even the end of this week coming. Ideally, we would want to see that pivot line up with a news event. So we will investigate what news events can do that in this video as well. But when we look at the daily time frame, it doesn't look like the weekend has had much of a bounce to give me the hint that they're actually not going to come for this liquidity. In addition to that, I did see buy orders. What I can see is that, well, by the time this video is out, this will be irrelevant. But right at this moment in time, 108.300 has significant buy orders. And the price right now is at 108.420. So it's only $100 weight. That's not really all that relevant for right now. But I'm looking more for buy orders in that zone of liquidity. And the highest level that I can see right now is at 105K, which is a little bit lower than I'd really want it to go, but we do need to be aware that that is where they're sitting right now. Above that, we have 107K, which is a little bit closer to the zone that I am keeping an eye on. Now, these orders aren't big. If you can see that number there in the blue box, it says 294. Personally, if I was going to expect a bounce, I want to see that grow to a minimum of 500. So it's really not enough to say that will be the pivot right now, but it is an area to keep watching to see if those numbers grow as the new week opens. So right now it does look like the area of interest is 107, 105, and we may even say 108 as well. So then when I look at that, that puts that right into this pocket right here. So if I have that idea, that allows me to now go down to lower time frames to see what is happening there. And I covered this actually on Friday on this channel, so I hope you caught that because I was expecting more of a move to the downside because I was waiting for this 4-hour level 3 drop to play out. Now, we did have the drop, and so that meant that on the presence of these wicks in this candle right here, we start to look for potential signs of a reversal. Now, these aren't high volume wicks, but we may see them on lower time frames. And if we do see them, that's where it will become relevant to look for a pivot as the week opens. If we don't see them, then that means that this level 3 is still in process. It's not actually finished yet. So therefore, we need to go down to the 1 hour time frame to see how that's playing out. Again, on the 1 hour time frame, even though we came into my zone of liquidity, I don't have any strong bounces out of here. The timing of this made it worth taking a long position. However, I will say, and I know that some members in Discord did open long positions, even though it was a weekend. That's not normal, but it can happen when you have such a dramatic move to the downside, basically over an entire week. You kind of have to look for the pivot wherever the pivot is, even if it happens on a weekend. So it doesn't look that great for Bitcoin, but some alts had a pretty nice bounce from here, and we did get some good altcoin trades. For my guys who are in long positions right now, my advice would be to definitely move your stop loss to entry now, because we are moving into the false move week beginning territory. And if that brings us back down to the downside as part of the false move being the September fake out, you don't want those trades that are long positions over the weekend to get stopped out in a loss. You can either close them if they hit your target as a day trade already, or at the very least move your stop loss, because we are, like I said, we're at high risk of the week opening with a fake out, potentially back down into this zone. And so I just want you to be aware of that, because look, if it doesn't turn out to happen and this ends up changing structure and we move to the upside, well, you're in your long position and you don't need to get a new one. But if it does, you don't want to be stopped out at a loss because you took a chance over a weekend to open a trade. So now what we need to do is identify how the weekend price action is playing out so far. And the thing is, what makes it a little bit difficult is that we have had a trend over the weekend, a very, very small time frame trend, but nevertheless, we've had a trend where we've created a peak formation low, and since then we're creating higher highs and higher lows. This is a lower high, so that's one thing to be aware of, but it gets a bit tricky to try and identify the false move that's going to open the week when the weekend is trending. So to me, this is probably going to lead to a no trade day for me tomorrow. Like I may not even look for trades until Tuesday. On that note, there is a holiday on Monday in the US, so the US session isn't even open. And that can also cause a lot of false moves in the prior sessions in Asia, UK, and also US. It can make it unpredictable. So I wouldn't be in a rush to trade this week based off this price action is the moral of the story. However, if you did take long positions at this pivot low, at this point in time, the price has moved enough away to protect the trade and just see how the rest plays out. And if it swings around on you, there's no loss. If you're looking to get into a trade, again, I would be forcing technical analysis to give you an idea of where to do that. But all I can really do is identify the trap traders so far over the weekend. And for me, this was the major range of the weekend. And we have trap traders both sides. So they moved to the downside here. And that's where they trapped shorts who believed we were going much lower. You got to remember on the internet, there's targets of 100K to 95K, even lower than 95K. I think there's targets of 93 as well. So you may ask yourself, why was someone short after we've already had such a large move down? Well, because they believe it's going much, much lower. So we definitely have late shorts here, but we've also trapped longs up here. So in the sideways consolidation, we had a fast breakout there that's moved with high volume. Buy stops above here have now been triggered into a long trade. And essentially what's happened over the weekend is that the market maker has trapped both shorts and longs. And that means they can wipe the board clean. They can send the price wherever they want when the market opens because there's liquidity either side of the weekend trap. Again, this just leads to another reason why we probably shouldn't trade until Tuesday at the very least. Let this kind of damage be done. Don't try to pick it. Don't try to be part of it. Protect trades if you're already in it, and we'll get back to normal trading on Tuesday. That's what this chart is basically telling me. Now, when I add the major liquidity above and below price, you can see here that the major liquidity that's been formed over the weekend is also at 107K. So look, for me, in an ideal world, we will have the false move to the downside. That's what I'd like to see. Not that I'm going to try and catch it, but if I see that happen, that is where I would definitely be looking for pivots. The only thing that's going to make me believe we're not going down there is if we break out of the weekend trap to the upside and we start to change a structure. So creating higher highs and higher lows. Again, if that happens, most of us are already in long positions from here. We don't need a new position. If you did, you'd be waiting for the price to reclaim the 200 EMA here on the 15-minute time frame, retest it and maintain above it. Why that one? Because you can see here in this whole down move, this is where it tried to break above and failed. So now, in order to change trend, it would have to get above and hold. So if you weren't in long positions and something like that happened, that's where you could then get involved. Would you go long now? In my opinion, no. I'd be waiting to see. Best price is going to be down here, providing buyers step in and we pivot there. Worst case is going to be break in and retest of the 200 EMA. When I zoom out again, though, I can see there is a lot more liquidity above price than there is below price. So I do think eventually we're going up, especially when you have a look at this heat map, actually. Look at all this liquidity, this yellow zone up here. This sits between about 113 to 116. This is just the 1 week liquidity for Bitcoin. So I do think that we will head up there at some point, but it may not be the market open that does it. So what does this mean for Ethereum? Let's have a look at Ethereum's bull market returns. When we look in 2017, again, a very bullish August followed by a bearish September. 2021, we had a bullish August followed by a bearish September, and this time we also are going to close as a bullish August. So it is possible that there is an altcoin correction. If Bitcoin is going to bounce in September, it's very possible that we have an altcoin correction whilst Bitcoin takes back over for a period of time. and then maybe eventually alts catch up to it. Another reason why I think this is a possibility is because of the dominances. Again, if you've been watching this channel, I talk about this a lot, but I am waiting for Bitcoin to bleed out, hopefully to the 800 EMA, and then come to create a lower high. Once this bleed is done, whether it's at the 800 EMA or it's down here at this key level at about 56.3%, wherever it is, it doesn't matter. However, at some point in time, it's going to have a temporary bounce, and hopefully that bounce creates a lower high before further downside, because the overall picture there, if something like that were to happen, is going to be for your altcoins. But in this period of bounce here, if that's also where Bitcoin price bounces, then all attention is going to move back into Bitcoin for a period of time, and that may cause your altcoins to pull back. So just considering we've had a bullish month for Ethereum, it is possible that we're going to get a bit of an altcoin correction, which in my opinion would be a buying opportunity anyway. And that would look something like this on the total. This is total minus stable coins, which is a bit more accurate to me. So we are waiting to see if this M formation actually plays out. At this point in time, it's not confirmed yet because the M needs to break the center peak down here as well as the 50 EMA. So this part of the M hasn't formed yet. And that's what we're waiting to see if that actually does happen. That might be where we see a little bit of an altcoin correction whilst all the attention goes back to Bitcoin. And then when you have a look at Ethereum chart as well, it kind of makes sense because I do see the three levels have played out on the daily time frame. However, one thing that's sort of bothering me about this is usually I would see the correction happen sooner, and this seems to be holding on. So this gives people time to take profits, which is not usually what happens when we're going to have a correction. So I'm a bit worried about this. When I say worried, what I mean is I want the altcoin correction because I want to be able to get more positions in altcoins before they really do take off. But I have to be aware that they might take off without a correction. That's what I'm waiting for more evidence of now. And the reason for that is because right now, whilst we do have lower highs on ETH, we also have higher lows. And so if this ends up forming a symmetrical triangle, we may start a new three levels again. This is what I'm keeping my eyes on for now. Either way, I'm bullish on Ethereum. It's just where can I get the lowest price to get more new entries. So this is what is important to watch for me right now. As you can see, there is liquidity either side of that current price. Obviously, that's building because Ethereum is essentially ranging. The other thing that bothers me a little bit about Ethereum is when I'm on the 1 hour time frame, what I can currently see is two levels of drop. So this one's very clear. This is the retracement. This is a clear drop here. And it looks like, again, since the weekend, we've had a bounce on Ethereum. These are the liquidation levels that it's already taken out. So it is definitely liquidating people on this weekend move to the upside. However, what I'm skeptical about is the fact that I don't see my three levels fully played out on this. And so I'm not sure if this is a false trend to the upside right now, just a weekend false trend. And maybe we won't head into these vector candles here, or potentially we're just coming to take out a bit more of the weekend liquidity. And then the level 3 is actually coming, which again would lead me to the potential open week September fake out. And I would welcome that. So one more move down on Ethereum may then come to liquidate these longs, may prove the September 1st week theory, may take Bitcoin down into its 107, 106 region. Like all of these things kind of add up to me. But if they're going to send price down, they probably on a small time frame will do a false move up first to take some liquidity, then head down. Then once they've taken out that liquidity that we're eyeing off, that's where we start to look for pivots. How long that takes, how long's a piece of string, we don't know. It takes as long as it takes. But as I said to you earlier, we need to start investigating what upcoming news events could cause the August sell-off to stop bleeding into September. So let me walk you through what is coming up this week, because each data point that I'm going to talk to you about has the potential to completely rewrite our September narrative. So we start Monday this week with the curveball. I mentioned it earlier. The US markets are closed for Labor Day. So stock and bond markets, they're all shut. So don't be surprised if crypto decides to make some interesting move when the traditional players aren't around to react. You can't expect normal market behavior when the US market is closed. So if you don't understand what you're seeing on the charts, it really is better to sit out until Tuesday at the very least. Now, Tuesday brings the first real test, which is the ISM manufacturing PMI. That is at 10 a.m. New York. Now, services matter more for the US economy than manufacturing, but here's the thing. This is our first major data point after the holiday. And in low liquidity environments, even secondary data can trigger outsized volatility. Wednesday is where things get interesting because we have the JOLTS job data at 10 a.m. And this is the first labor market read of the week. And the market is going to be treating this like a preview of Thursday and Friday's main events. That means that Thursday is the chaos day. So we get hit with a triple combo. We have ADP non-farm employment change. So a lot of smart money is starting to question the accuracy of government NFP data. So ADP, which is private sector data, might actually carry more weight than it historically has. Then we have the weekly unemployment claims. Normally it would be a non-event. There's a bit of a wrinkle here. A bunch of government employees who got fired earlier this year are running out of their severance packages right now. So this number might start mattering again. And then we cap Thursday with ISM services PMI. Services, remember, is the backbone of the US economy. So this one also matters. And then Friday is the main event. So we have non-farm payrolls at 8:30 a.m. New York time. And here's what everyone's whispering about, but nobody's really saying out loud. There's a real possibility that this number prints negative. Now, later in the month, we also have FOMC, but that's on September 17th. But if the fake out week theory holds true for September, then we would expect the market to pivot in anticipation of a positive FOMC. And that could mean that there's a potential news event prior to FOMC, could be the week prior, like for example, could be CPI or PPI, or it could even just be something unexpected that causes it. So there it is. September might not be the month that everyone thinks it's going to be, maybe not this time. While the others are positioning for the pullback that may never come, you now know what to watch for. That first week fake out that we talked about, that will be your signal if it does turn out that way. The liquidity is there, the patterns are there, the structural differences between this August and every other bull market August, that's all your breadcrumbs, right? And remember that whether Bitcoin runs or whether alts take the lead, whether we get that last great dip or we're already climbing out of it, none of it happens in a straight line. So the market doesn't care about your timeline, but it does reward patience, preparation, and the willingness to see what others might be missing. Now, if you want to learn how to trade these setups the way we do here, or you're looking for a community that's constantly working through these opportunities together, consider joining us over at Trade Travel Chill. We are always diving deeper into these patterns, sharing real-time analysis, and helping each other navigate exactly these kinds of market movements. For everything you need to know about our trading memberships, you can check out the link in the description of this video. Now, this week, it's going to be interesting because we've got the labor data, we've got Fed whispers, holiday market shifts. You're going to need to stay sharp and stay flexible. And remember, sometimes the best position is the one that nobody is expecting.